All right. We don't want to lose sight of what is going on with the economy, which obviously is, probably the most important story for all of your lives. And there are some bad indicators in terms of the direction that inflation is heading in, which both has an impact on, your pocketbook right now today, but also what the Federal Reserve might do down the road, which can have more of an impact on your pocketbook, and what it means to your whole life. So let's go ahead and put this up on the screen. From the Financial Times, the headline here is Federal Reserve's favored inflation gauge accelerated in January. They use, I guess that's the way the Brits spell favored, huh? The Personal Consumption Expenditure Price Index, which measures how much consumers are paying for goods and services, increased 0.6% month on month after rising 0.2% in December. So that is an acceleration. The annual rate increased to 5.4% in January from an upwardly revised figure of 5.3% a month earlier. The so-called core PCE index, which strips out what they describe as volatile food and energy costs and is the Fed's preferred inflation metric, rose 0.6% in January, up from 0.4% in December. So basically, the bottom line here, before I bore you with all these point whatever percent, is it's getting worse. According to this metric, and this is a metric that the Fed really pays a lot of attention to. They say that following Friday's figures, investors priced in a 39% chance of a half-point rate rise at the Fed's March meeting, compared with an 18% likelihood a week ago. So basically, investors are looking at these numbers and thinking that there is an elevated chance that the Fed is going to go even further and go from, a quarter-point increase to a half-point increase, which would have more of a dramatic impact on the economy ultimately as they, tighten and make it more difficult to borrow, increase interest rates, make it harder to, make mortgage rates go up, all of those things that we've been talking about for a long time. So this is a very bad sign ultimately.
Oh, yeah. And actually I was reading, so there was a former Federal Reserve governor, Frederick Mishkin, who put out a white paper, which is very influential. CNBC and all those other covered it. And they say that despite the sentiments of many Fed officials, they can manage the quote, soft landing. The paper says it is very unlikely. We find, quote, no instance in which central bank induced disinflation occurred without recession. Furthermore, given the latest numbers, they say the Fed will need to tighten policy significantly further to achieve its inflation objective by the end of 2025, which is a 2% inflation rate. So basically they're saying if the Fed is going to be the only tool here, you are going to have a recession, and they will need to continue tightening all the way up until 2025 to make sure this happens. And so that's why we're really in a bind here. The policy, the White House and the Congress has abdicated all this responsibility. The Fed only has one tool, which is basically beat the economy over the head with high rates as possible. What does that mean? Have housing problems right now in terms of the mortgage rates are beginning to come down a bit, but they're still vastly unobtainable. It's not like the price eventually dipped. Yes, we did see the world's billionaires did lose a significant amount of wealth, but it's not like you had an average wage increase relative to inflation. So we basically have high prices and we have a slowing economy. It's like the worst of literally all worlds. And it's because, guess what? Our economy is not just about rates. It's about inputs. It's about supply. It's about Ukraine. It's about, and not the aid we're giving to Ukraine. It's about, all of these sanctions on the global financial economy, reopening of China and what exactly that's going to look like, the price of gas. I mean, I think that's really been the major lesson of all of us. And, sadly, on a policy point of view, we have not done a damn thing about any of that.
Yeah.
Literally nothing.
And the White House wants to point to the low unemployment rate, which it is low.
Great.
And be like, look, the economy's great. And meanwhile, you have record numbers of people saying that they're doing worse this year than they were last year. You have huge numbers of people, something like 70%, saying we're on the wrong track. You have more people living paycheck to paycheck. You just have metric after metric after metric that indicates that people are struggling. Okay, are there jobs? Yes. Are they good jobs where you can actually afford to live and rent an apartment or, lo and behold, buy a house? No. And so that's why you see these, yes, the unemployment rate is low, but on all of these other metrics, the economy is struggling and more importantly, people are suffering. So this is a bad sign that we continue to head in the wrong direction here and that, it's going to be increasingly difficult to avoid a recession, even though, all the talk of a soft landing. These are the types of numbers that make that difficult, if not impossible, ultimately to attain.
It's a bad situation, and already, we're seeing implications in cars and in housing, and we should just remember, this may be this may be as good as it could have been, you know, in retrospect, as painful as the last 2 years. If they induce a recession and they continue to go up, like the housing market will go into chaos, stock market, retirement portfolios, the ability for a lot of these people to manage or also layoffs. I mean, the tech layoffs happened with just a moderate increase right now in rates. Imagine if they're going up by, what, 3, 4, 5 more percent, which is very possible according to that, and not outside the realm of possibility if you look at what happened in the 1970s. If we go up to 9 or 10% or something like that, it's literally going to be madness in the economy. And that's what we all lived through. That's why people were so afraid of inflation throughout the 1980s, because they had to live through the chaos of what the 1970s would look like. And I don't know if there's a way out of it. I really don't. I really hope that we can, but I don't have a lot of faith.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.